The Apartment Gurus podcast is brought to you by Greenlight Equity Group, an apartment acquisitions and holdings firm co-founded by Carl York and Tate Siemer, host of this show. We offer you the opportunity to be an owner of cash-flowing, wealth-growing apartments without the headaches of being a landlord. These assets are recession-resistant, risk-mitigated, offer significant tax advantages, and are a great alternative to the stock market. Ready to check it out? Go to www.investwithgreenlight.com today to book a personal consultation with Carl or Tate. Again, that's investwithgreenlight.com. We look forward to meeting you. Welcome to The Apartment Gurus, where twice a week, host Tate Siemer brings you deep dive interviews with the wisest gurus in the apartment investing industry. These experts are sure to create game-changing value and inspiration designed to catapult your business to the next level. Be sure to reach out to Tate at www.investwithgreenlight.com for access to his investor portal and Calendly link. And now, here is Tate Siemer and the Apartment Gurus.
Welcome, everybody, back. Another episode of the Apartment Gurus podcast coming at you where the guest is the guru. And I'm excited to have a friend of mine, Jared Asch, on the show. Jared is a multifamily investor and is, Jared, are you a partner or it says, you say you're the partner in Crown Capital. Is Crown Capital?
I am a partner. There are four of us all together. Okay. Yes.
Yep. Perfect. But Jared's role is really building relationships with investors. So this is going to be a fantastic conversation about that. I'm excited to dig in and talk about all the different ways that you can network and build relationships with investors. That's great knowledge to have. Jared is a general partner and an investor in a 134 unit apartment building in Houston, as well as a GP on apartments in Lubbock, Texas, and Louisville. Can't wait to talk to you about Louisville. He's been investing in real estate since 2017 and owns several rental properties in Memphis, Tennessee. In addition to his work with Crown Capital, Jared is the founder of Capstone Government Affairs, with over 2 decades of experience in governmental affairs, economic development consulting, and he's an expert at building relationships in that space as well. He has a master's in public administration. I love this. You're a LEED certified by the U.S. Green Building Council. And Jared currently serves on the city of Walnut Creek as transportation commissioner. You are just a busy, effective impact maker. And also on the chairman of the board of advisors to the Contra Costa County Transit Agency. Probably Jared he's a 2-time Ironman, avid triathlete, lives in the San Francisco Bay. And probably most importantly, I'm sure Jared would agree, is he's got a wife and 3 kids that he is chief of the pack for. So Jared, super stoked to have you, man. Thanks so much for being on the show.
Yeah, I appreciate it, Tate. And I think anybody who's a father of 3 daughters will say we are not the chief of the pack. We are just a handbag carrier of the group.
Yeah, man. No, I get that. I'm not a dad, and never have been a dad. So I can't say I can relate necessarily, but I sure have. My business partner, Carl, is a dad of 3, and I think he would agree with you, especially about the girls. He's got 2 girls. So dude, excited. You and I were talking before the recording. You have a really cool story and some cool experience with just treating investors right. And that's really the theme of today's show is how to really take great care of your investors. Jared's an expert at that. So Jared, if you would just kind of fill us in before we dive into that specifically, just fill us in a little on your backstory. Give us some color on on your professional path, your real estate path, and kind of how you got to where you are today.
Yeah, I started on a unique path, probably for most people in real estate, but I started as a political and nonprofit fundraiser. Somebody who was raising money for presidential campaigns, ballot initiatives in multiple states. And it taught me early on, one, how to make an ask that get somebody to fall out of the chair when they hear the dollar figure, but two, how to build relationships, that you didn't want it to seem just transactional. And you were just looking for them for a check. You wanted to listen to them and hear what was important to them. Why would they make this investment, so to speak, in a political candidate of one party or another, or one cause or another? What was their driving factor behind that? And what did they want to see the value of that? Mm-hmm. And I spent a number of years doing that, and then doing government sales. So helping companies connect with relationships as part of my government affairs job. I say I'm like your mayor's golfing buddy in a couple of cases throughout the West Coast. And it's about relationship building. I don't actually play golf, but it's an easy metaphor for people to just show that it's about relationships. And that, I had started compiling some single family properties, and I still own those in Memphis, but I was looking at how do I scale in this, right? And I spent about a year and a half studying the syndication market, had lots of conversations with people like you and your partners along the way. And it said to me, if I wanted to make $6,500 a month in passive income, which was one of my goals for a specific reason, how did I get there in the single family space? And it wasn't going to allow me to get there at the rate I was going within like 15 years. And so it led me into this multifamily space. And as I was having these conversations, I looked at what was I really good at. And it was that relationship building and capital investment standpoint. I understood how to talk to people about how to get a return on their investment. And people trust me because they know I'm not here for one-off transactions. They know I'm here for a long-term friendship.
Love it. Yeah.
Key takeaways here. Like, hey, Jared, can you hear me all right? Yeah, perfect. Okay. Yeah. Big key takeaway here is long-term relational game that's not transactional. And when you're working in the multifamily space, I would say anyone that you're working with, whether it's your lender, your property manager, your title company, your attorneys, like you want those all to be part of your power team, which is a team that you have that does every deal with you, ideally. Brokers, certainly. So when you're talking investors, like this is a long game, and you're going to typically talk to investors, what, Jared, what would you say, 3 to 6 times, 3 to 7 times before they actually invest in terms of correspondence, something like that?
Yeah. 3 to 6 times on the phone, I'm finding, and then more via email, social media, webinars that we're hosting, et cetera, right? Really providing value to them before they're ready to go.
That's the key, is you're coming at this from a value add, long game perspective of getting into the investor's world and learning what's important to them, what their pain points are, what their motivations are, what their resources are like, and what their goals are. And given all those things, you want to be as much a listener as anything else when you're talking to an investor, because you want to learn every bit as much about them as you can. And all the questions that you're asking at that point are questions that lead to greater greater knowledge of that investor, right? So and then look, again, just to emphasize the long game aspect of this, if an investor invests the minimum with you, that first deal that they do with you, great. That's a win, because a lot of times an investor just wants to test the waters with you before they really dig into their balance sheet and bring out their, any kind of capital that they really want to deploy. Like they might say, all right, let's try this $50,000 deal with Tate or with Jared on this time around. And if it goes really well, then we'll do it again, and we'll double or quadruple or whatever the amount that we're investing. So have you found that to be true? Like most capital raisers I talk to say that the best source for investors investment capital is your current investor list, and the best source for referrals is the same place, because those are the people that know you well and know how you do things. Have you found that to be true, Jared?
So yes and no, and I'll tell part of that answer is a story. A friend of mine, Justin, I first met back in 2003, 2004. And we've known each other, and we've done some business along the way in different capacities. I've referred him some business, so I've helped make him money, and just a good friend overall. We have similar interests. We chat all the time about what's going on in our various fields. And he said, look, I want to do this, but I don't know anybody else in your space. I don't know anybody else on your team. So I want to do this to give you, so I don't want to come in with 50. Can I do 25 for my RRA account? And how can we make that happen when the deal had a minimum of 50? And I said, you know what? We actually do have somebody else who said they would come in at 25. So I'm willing to change the minimum and split it between the two of you, because I want this long-term value.
Yeah.
And he came back to me and then mapped out a strategy, how he could make future investments if I did this for him with me, both from his IRA and from his personal investment account, but how at some point he would introduce me to a dozen guys that he is friends with, where he regularly talks about investments. So because I did this one thing to him, he did it because he trusted me, because we had a 15 plus year friendship, but he also did it to show me an incentive. Hey, make this work for me now, and I will also make it work for both of us in the future.
Yeah.
And so we're continuing to have those conversations. He's not ready to make other introductions, not ready to make another reinvestment. He's 9 months into a deal that is probably 6 months away from cash flow. But that's how I look at it, is how to build that relationship. I have found, the second part of your question was how have I found how my friends react to this? It is taking a lot to convert my existing relationships to say, I know this field really well, and you can trust me with your money. And so to do that, we're doing similar things to what you do. And I study Tate a little bit. I'm having a monthly meetup where we're doing educational webinars. We're looking at your newsletter, as well as a dozen other people's, to say, what educational content should we be putting out? How are you dealing with market trends, news in the media about interest rates or things like that? And how do we communicate that back to people? And with my other three partners, we actually look at a dozen newsletters of different providers every month. And then we take the best education and the best ideas and make it into our own.
Sure.
And we're really just educating our investors about this space, people who typically invest in stocks or who own their own real estate. Why should they invest in a syndication as a limited partner?
Yeah. Yeah. That's great. So when you are, what does growing your database look like? What's kind of key strategies do you have around that? And how does that typically go for you?
Yeah, so it's twofold. One, I'm a big believer in LinkedIn. And so I'm reaching out to people who are second connections of people who've invested, but a type of person who's invested in the space, and saying, hey, this is who I am. This is how I found you. I see we have 14 friends in common on LinkedIn. I thought you might be interested in learning more about this. And I don't sell them anything. I'm not looking for them to invest in 2022. I'm looking, how can they invest in 2023 with me? Right? what do I have to provide them first? And I just started casual building a relationship on LinkedIn. I don't even add them to our email list. As that continues to grow, I start adding them into our email list, offer them our ebook and things like that. The other thing I'm doing is I already have 7,200 plus connections on LinkedIn. I've been very active over the years, decades on LinkedIn. And I am starting an exercise right now where I've put all those names into a spreadsheet, and I'm literally going through and dividing up people who I think would be interested in real estate investing or just learning more about the space, and people who I'm not quite ready in my universe to invite into the multifamily world, that they are my day job connections, that they're just family connections, and I'm not ready to have that conversation.
Yeah.
And as I'm going through this, I'm out of 7,200 people, I'm looking at like 2,000 plus people that I can start talking to. And all of those people are people I'm going to start with one email on LinkedIn, one push for a phone call, a check-in later. And it's doing that philosophy. And as I start talking to people, it just, hey, what's your investment philosophy? Where are you on your financial goals in life? And really building that conversation and relationship.
Yeah, that's perfect. So listeners, LinkedIn, like if there's one takeaway from this show, other than take great care of your investors, like you should really, if you're not on LinkedIn, absolutely get on LinkedIn and start doing searches for things like, commercial real estate investors, LP equity, LP equity investor, stuff like that. And do it in your region if you want. Like, it's amazing how much there is out there, how many resources there are in our space in LinkedIn. And if you're not there right now, you're missing out. It's really a vibrant platform that is happening. It's kind of like how a lot of people are kind of comparing it to like Facebook 10 years ago or 12 years ago. It's just evolving quickly. It's essentially ad free. And it's really like, I'm convinced that you could start a equity raising platform program based completely on LinkedIn relationships myself.
Yeah, that's what I'm trying. Like, one of my other partners is on Facebook and Instagram more than I am, and I'm really working just LinkedIn. I find it's a great business place. You're not mixing that personal that Facebook has,
Right.
which is fine. Like, that's a good place for certain people to be. For me, it's this professional world and set of contacts that I've been working with and connecting to in multiple ways over the years. And then you're right, you could just keep adding to people based on keywords.
Yeah. Yeah. And just developing the relationships. Eventually you establish enough of a presence and enough mutual connections that people start reaching out to you. I'm sure that's kind of how things are for you, Jared. Like, I get barraged with LinkedIn connection requests and Facebook friends requests for that matter. I haven't figured out how to tap into that on Instagram yet, but at any given point, there's like at least 100 friend requests in my queue waiting for me. But look, guys, this is like capital. This is like currency, right? Like, this is how business gets done in late 2022. And we're recording this. This will probably come out in early 2023. This is where relationships happen. This is where people connect and find each other and do business together. And look at LinkedIn, and in terms of like inside of the multifamily investing space, look at it as a huge mastermind, because every single day people are sharing articles, sharing videos, sharing graphs and stats, and like, you're going to learn a ton by staying active on LinkedIn. So here's your assignment, listeners. I don't think I've ever given a direct assignment in 170 plus shows of doing this, but your assignment is to time block this. Like, get on your calendar, time block a half hour, 15 minutes every single day to stay up to date on LinkedIn and to grow it. to grow your influence on LinkedIn. Yeah, a lot of people are wondering, how do you become a thought leader in this space? Tate, you do a podcast, seems like a lot of work, and there can only be so many podcasts, right? Well, first of all, no, but second of all, yeah, there's other ways to do it. Being a thought leader on LinkedIn and sharing great content, whether it's your own or other people's content. I mean, Jared just went through a great strategy of content generation. Sign up for other syndicators' newsletters. Sign up for every single one you can find so that you're getting newsletters with articles and ideas that are completely value add, that are going to, increase they're going to increase the quality of your relationships with everybody that you're working with and trying to influence. So, yeah, it sounds like you got some good stuff going there, Jared.
Thanks. And I just looked while you were talking there. You and I have 92 connections in common on LinkedIn. Now, most of those are going to be other syndicators, right? We both know people who are doing their own apartment deals, their own GPs. But what happens if on that list, 2 of those 92, so 1 in 41, actually invest $100,000 into our project? Right, to each of us? If they did 100,000 in your next deal and 100,000 in my deal, it was just worth the time for us to even have this conversation and just know who is out there and how to mine that information successfully for us.
Yeah, absolutely. That's good stuff, guys. Listeners, this has been gold so far. So, one suggestion I have for you is listen to this again. Because when you have an episode like this that just is kind of dense with great ideas, you're going to hear something the second time, and you're going to hear something important the second time that maybe you don't pick up on the first time. So, Jared, talk a little bit about Crown Capital. Talk about your team and kind of how you guys do things. What your role and how it interacts with other people's roles in the grand scheme of things.
Yeah, we have a diverse team. There's 4 of us partners, and we all have diverse professional backgrounds as well as ethnic backgrounds. We all live in slightly different areas of the country. Well, 2 live in the Maryland, D.C. area, 1 up in the Northeast, and then I'm out of California. And I think just how we come and look at this all and who our networks are, really that diversification really helps us, 1, talk to investors better, understand their needs better, and make sure we're not missing anything between all of us. My role is primarily to do outreach to new investors and manage that. That doesn't mean that everybody doesn't have a role with investors. We all do, but my goal is to talk to 1,000 people, in a year. Right, that's at least 3 new investors a sort of day, and if you don't do the weekends, that's 5 investors almost a day. Mm-hmm. And so that's my function, is to build that relationships. Others really focus. We all help on content. One guy is our underwriter and deal finder. He's the guy who meets with brokers, inspect it. One person is in charge of social media. They are also our asset manager, but they're also making sure we do things like send gifts to our investors and make sure we're treating them right and just making sure we know they're here. One person writes all our standard operating procedures and do our back end. That person is also hosting meetups though in the Maryland area and is active in investors. So we all help each other. We all bring strengths to the table. You're part of a team. You see that. And we've been working together. I think we've all known each other in some capacity for a little over 2 years each, sometimes 3 years. We've all been working together for about a year together actively.
Nice. So when you guys do a deal, is the principal just Crown Capital? Do you guys, not to get too much into like how you split things up and whatnot, but just kind of curious about the mechanics of it. Is everybody just kind of in on the GP? Is that how it works?
Yeah, we all own 25% of Crown Capital.
Yeah,
and we split our profits. So there's one deal right now that we're finishing a raise on, and I'd say one person did 80% of it. I probably did the least, but then we have our next deal, and I might get 100% of it by myself, or I'm hoping I do. And it's not that I did it by myself, right?
Right. Sure.
Noel is doing the due diligence. He's done the underwriting. He found the deal. He's finding the lenders with Tiffany, and we're interviewing different property managers and doing all of that. And so we're all sort of backing up each other and helping. So it all finds a balance to the team. We all help each other.
Yeah. Yeah. I love it. Sounds like you guys work real well together. And yeah, again, takeaway here is to emphasize a mantra in the space. My dog is really excited about this part of the conversation. Just to emphasize, this is a team sport, guys. Like, listeners, if you're thinking about trying to do this on a solopreneur level, please reconsider, because I maybe know one person that has built a great portfolio kind of as a solopreneur, but even he has a staff, and his wife who's a partner, and he partners up on deals. So now, you may or may not want to do what Jared and I have done, which is partner up with and build a team that is as well-rounded out as Jared's is. You may, and that's like permanent, quote unquote, permanent partnership right there. You're partners on every deal. I always recommend, if you think you want to partner with somebody, partner with them on a deal. And, even if it's a deal that they haven't necessarily found or whatever, like, bring them in as an advisor or some GP level, and warm up the relationship that way, and then see how things go. And if things go well and grow organically between you, then maybe down the road you look at, building an acquisitions team or a capital raising team or whatever with them. But so yeah, good takeaway there. Team sport, guys. So be a good partner, be a good playmate, good teammate, and things will go well for you. Jared, so in talking about taking like really good care of your investors, and the word meticulous comes to mind, because with investors, you just can't let stuff slip through the cracks, and you have to be so thorough in communication and frequent in communication. What have you found, number one, is most important to investors, and number two, what have you found to be the most effective techniques of really making investors feel like they're really well taken care of?
Yeah, and you'll meet a lot of other syndicators that say, hey, I always put the investor first. Well, what does that actually mean to you, though? And how do you do it? Not just send them a $10 Starbucks card, but really understand what they're doing. And I'd say the first feedback I get from investors is, more than making them money, don't lose their principal.
Yeah,
right? So, I think, and there's a lot of this going on with interest rates changing and everything else, is, hey, if I don't get my money back in 5 years, if I get it back in 6 years, but it's a better return, that's okay. If I gave you $100,000, don't lose that $100,000, right? I'm giving that to you out of trust. And if I only get 101 back, that's better than giving me 80 back, right? So they stop looking at the returns at first. They all want the returns, but it's, don't lose my principal. That's hard-earned money that I've already had. Make it work for me and show me you value that.
Right.
And along those lines, there's 2 deals that I pulled out of, including one deal where we wired back about $2 million to investors.
Wow.
And there is nothing more painful than being a syndicator who's wired money back. But it was the right thing to do for them. And we paid their wiring. We reimbursed their wiring fees as part of it. We did it prior to a deal close. And what happened on that deal is, we were a couple days away from the closing, and the loan terms started to change with the lender. And then they had problems with the loan, and it was going to push us back. And there's always something with the loan that goes on that requires more paperwork, more due diligence, a slight change in terms. But this was a dramatic change in terms. This was, hey, you guys don't have enough liquidity. You don't have enough. Well, why did the value of our liquidity change? It didn't. Or it should have been noticed a couple of weeks ago. And there was multiple changes to our loan that ultimately made me feel like terms were changing to what we told investors. They'd still get a great return, but it was impacting their return, so it would be lower than I anticipated. But there was too many changes, and I didn't like it. I didn't know if we'd be able to close. I didn't know if the deal would go through. And I just said to the other people, fortunately, I raised my money through a fund there. I always generally operate through a fund, so we still have control of our investors' money before we turn it over to the final property deal. And there was just things there, as I said to somebody, my spidey senses tingled, and I didn't like it. And I said, I'm pulling out of this deal. And it's based on that principle of I'm not, I'm just not going to lose anybody's money. And most people were very respectful of that, of the investors. I think we had one guy who really didn't understand what we were doing. How do you give back, that much money? But everybody else said, hey, you learn, right? So tell me what you learned during this. I remember one woman talked to me about my lessons. And then she called me back a week later and said, okay, now you've had time to get over the emotions of pulling out of this deal. Tell me again what you think you've learned. And she showed me a comparison as an investor, taking the time to show me what did I say immediately and what did I say a week later and what I learned. And that, led to her investing in another project with me because she knew that I had her best interest in mind in doing it.
Yeah. That's awesome.
That's how you put an investor first.
Yeah. That's awesome. That's I mean, for those of you that have done deals, and most of you have done deals of some kind, whether it's in the single family space or small multi or even larger multi, you put so much into a deal, and people say don't get emotionally attached to your deals. Well, look, when you find an exciting deal, especially in a market that is, a very competitive seller's market, and you find a good deal that you think you want to do, like, you get excited. Like, it's just part of why we're entrepreneurs is like, we love this game and we love the wins, right? So you get excited, and it takes a lot of emotional maturity and intelligence to be able to cut a deal loose. And because look, you had already earned, or not earned, you had already gone out and raised the capital you needed, and you had the deal under contract, and those are the two biggies, right? Those are the two things you need to do to get the deal to the finish line. And like as you said, it just didn't smell right to you, so you bailed. And that proved to be a very key thing when it came to your investor investing with you again in the future, that you gained. You lost the deal, right? You may have dodged a bullet, by the way, and not doing a bad deal, but you gained an investor probably for life by doing so, and maybe more than one investor. So like, that's an awesome story. And it's a great answer to my question about, how do you take good care of investors? And to your former point, Jared, the guy that invests the 100,000 and just says, don't lose my principal, right? You hear that all the time. Like, investors' true concern, like their biggest number one concern is, am I going to get my money back? Right? Like, not how much return am I going to make, not like what schedule I'm getting paid on, all that stuff. The biggest concern is, how am I getting my money back? And so, return of capital is key. It's so, it's key. And that's why doing good deals is so important. Having a good business plan is so important, and being able to execute it well with a good property manager is so important. And that's a sidebar on the importance of having a great property manager that I won't go into, but so that's good stuff, Jared. Thanks for sharing all that. So, as you say, you're talking about 5 new investors a day.
No, I'm not at that pace right now. That's where I'd
Okay.
like to be. That's probably my realistic 2023 goal. Right
Okay.
now, I'm talking to maybe 10 to 12 people a week.
Okay. So, and are those generally coming from, like, say, your LinkedIn type sources that have, you've nurtured a little bit of a back and forth with, and they eventually want to talk to you live? Is that kind of where those are coming from?
It's coming from multiple sources. I would say a good portion from LinkedIn, because I am spending a lot of time doing that and trying to generate calls, either new contacts through LinkedIn or existing relationships that I've had for years on there. I'd say I'm starting to put together a meetup in the San Francisco area, and so a couple from there, a couple of other networking events I've attended for business groups or whatever, and I'll meet people and talk about it. So a combination of multiple touch points, but I would say at least 50 to 60% of my investors are coming off of LinkedIn. But again, 2/3 of those are people I had existing relationships with already.
Yeah. Okay. Gotcha. Just kind of curious about your sourcing for new conversations. And, what I've found in business in general and entrepreneurial ventures is, like, get out there, tell your story, talk to as many people as will listen, ask for referrals, ask for other connections. A great question is, who else do you know that might be interested in something like this? Like, you want to be asking every single person that you talk to that question, because go ahead.
No, I'll go in on that. So like in Louisville, where we just are about to close our deal there, I started with, hey, who do I know in Kentucky on LinkedIn?
Okay.
And there was like 14 people.
Nice.
Right. It's okay. It's not California. It's not even Salt Lake, which is a bigger metro area.
Right.
It's not a place I've done a lot of business. Okay. I'm going to reach out to each of these people and send an individual message to them and just say, let's catch up.
Yeah.
And let's find out what they're doing. Hey, here's the thoughts. I'm buying this. What do you think of this market? What do you think about this neighborhood if you know the market really well? And I'm starting to get traction from them. And it might not be that any of them are investing. I think one guy will, so 1 out of 14, but I'm going to get other introductions.
Yeah.
Or people who are going to follow up and say, hey, maybe I didn't invest in this deal, but now I'm just going to track what Crown Capital and Jared are doing. I might partner on this next deal he's going to do.
Yeah. Super smart. By the way, I love Louisville as a market. We're invested in Columbus, Ohio, which is 3 hours away, and in Oklahoma City. And we really like these growing, exciting, vibrant Midwestern these cities. And Louisville is a lot like Columbus, where it has a nice big university and just a lot of job diversification in the employment space. So, like, there's a lot to be excited about for that. And it's kind of maybe in our path of progress at Greenlight Equity Group, my company, because it just the metrics are great. That you can still buy stuff there that cash flows. So that means you can, like, pay a pref, pay your investors a preferred return, and also have the equity growth because the market itself is growing and appreciating. And then, on a deal by deal basis, you find the forced equity play. So you combine all of those, and you can be talking about a really sound place to invest, in my opinion. So yeah, good on you. Do you know anything else about the Louisville market that I didn't mention?
Is one of the conversations I was actually having with somebody this morning is, how long are people staying after college? Right. And it's a hard stat to directly check. I mean, there's some stats that are out there, but what's the feeling? And they said that most people are staying till to get their first job, even their second job, until they're like 30 to 35. And then they're starting to see a drop off, they feel like.
They moved to Florida or Texas.
Or they could be from a more rural area or suburban area within the state, within that region. And now that they've got one kid, maybe they had one kid and they stayed in Louisville, but now they have a second kid and they want to be closer to their parents. They want to go back home to somebody. And so is that a trend that the population is going up, but is it short-term or long-term? I do believe it is going up long-term. I do believe people are staying there. Same thing with Lubbock, one of those college towns like you described, Columbus, that people are staying, but it's something that I'm going to keep paying attention to. And it also helps us know who to market to, right? That feedback on the ground. And maybe you and I will partner on a deal in Louisville.
Yeah, love it. Love that idea. See, guys, this is how it's done, right? Jared and I are chatting, talking shop, talking how we do things, strategy, and now we're going to partner up on a deal in Louisville. I love it. So Jared, this has been awesome, man. Any kind of, just to bring it full circle, we've touched on some really powerful stuff here, I think, today, and any kind of like final words of wisdom for the listener, the aspiring multifamily investor, existing multifamily investor that just kind of wants to level up, right? Like, what any words of wisdom for those folks?
When you're talking to somebody to build a relationship with, especially if it's somebody you've been on the phone with for a second or third time, don't ask what the weather is. In Phoenix, in August, it's hot.
Right.
In Iowa, it's cold in January. Right. Ask what they did that weekend.
Yeah.
Right. Did Tate go to a soccer game? Did he go skiing? Did he go hiking?
Yeah.
I'm more interested in that, because that's something that's going to build a relationship. Oh, let me tell you about this hike I did too this weekend. Is he ever going to do the same hike I did? No, we live in two different places, but we're bonding over something, right? Not if it's hot or cold outside that day. So do more to build your relationship, get to know the individual. That's about building a relationship with an investor.
Yeah, I love that FORWARD acronym. When you're talking to somebody and trying to, really get in their world, they want to talk about, people love talking about themselves. So ask them questions related to F and FORWARD is friends. I think the O is occupations, R is recreation. What people love to talk about, what they do for fun, and dreams. So you get them talking in those different realms. I always ask people what they do for fun, and I know Jared's a triathlete, and I know that that's one of the things he does for fun, and knowing that about him makes him more personable to me. It makes him more of a person. Plus, it's bonded us. We know something kind of cool and personal about each other now. So, so remember that FORWARD acronym, but more importantly, remember, absolutely 100% don't talk about the weather. Like people in this space are up to big things. They're doing deals all day, every day. They're doing, multi-million-dollar projects, and the last thing they want to do is talk about how hot it is in Phoenix in the middle of the summer. Right. I get it. It's a great point, Jared. Well, Jared, how can people learn more about Crown Capital and about you? How can people connect with you?
Yeah. www.crowncapitalcorp.com. And then find me on LinkedIn, Jared Asch, JaredAschh. I believe I'm the only one with that spelling on LinkedIn, so that's a fortunate plus. Find me, find Crown Capital, and let's connect. Let's become friends and start building that relationship.
Yeah, there you go. You guys have a free ebook on your website too, don't you?
Yes, from crowncapitalcorp.com. You could download about how to invest in apartments and where to start.
And look, if you're a capital raiser out there and you either don't have a landing page or your landing page isn't very good, check out Crown Capital's landing page, Crown Capital Corp. Is it .com?
Crowncapitalcorp.com. And in fact, it's a new website, I think, as of today. So it depends on when you.
It's hot, man. It looks awesome. In fact, I sent the link to my VA, who's working on a new landing page for us. And I said, I like everything about this site. Like
Sweet.
The content, the graphics, the layout, like fonts, everything looks awesome. Good job. Jared, thanks a ton for being on the show. Really appreciate you, man. Lots of gratitude.
Yeah, I appreciate it too, Tate. Thanks.
Yeah, you betcha. And listeners, thank you. Appreciate you guys. take a second to leave a quick rating and review if you feel inspired to do that. It means more to me than you have any idea, to be honest with you, and it helps the show a ton. So with that, we'll bid you adieu and see you on the next episode of the Apartment Gurus podcast. Take care, everybody.
This has been the Apartment Gurus with Tate Siemer. If you enjoyed this episode, be sure to subscribe and leave a rating and review on your favorite podcast platform. To contact Tate, go to www.investwithgreenlight.com for access to his investor portal and Calendly link. He loves to hear from you and thanks you for being a valued listener. Just a reminder that you are the guru. See you on the next episode of the Apartment Gurus.